Are we going to see a crash in the Boise real estate market in 2021? I know it's hard to tell with everything we have going on right now in the Treasure Valley and even on some of the stories that are hitting the national headlines, if you know what I mean. I'm right there with you and totally understand. I've seen so many different markets over the past years, and it has been one of the most unprecedented and unfamiliar markets since I've started appraising back in 2007. Like I tell everyone, we have to look at what we know right now and what does the evidence suggest is going to happen in the market. Hi, Brian Hymas here, realtor at Brian Hymas Real Estate at Boise Premier. With bidding wars and lack of inventory, many people are asking me if we feel the market may crash. You know the saying, what goes up must come down. I understand how scary it may be thinking about what to do. I'm in this market just like you are. Now, according to Bloomberg.com, the U.S. economic recovery is widely uneven. More than 13 million Americans are unemployed. That is not good for those 13 million. At the same time, many others have been able to work from home and some are actually richer thanks to the surging stock market and the housing boom. According to Investopedia.com, this type of recovery is called a K-shaped recovery because the path of the markets has taken a divergent split. Economic performance of different sectors, industries, and groups within an economy always differ to some extent, but in a K-shaped recovery, some parts of the economy may see growth while others continue to decline. With regards to the housing market recovery index, here's a graphic from Realtor.com. You can see a V-shaped recovery, which was just as predicted in March when the pandemic started. The market has done a phenomenal job recovering and is looking better than ever. Now, we can all acknowledge that there was a dip when the pandemic first started, but now, as you can see here on this video screen or look around you in the market dipped and is taking a strong, steady rise, and now we're stronger than ever than we were back in March. This analysis measures four things. One being demand of homes, meaning are buyers wanting to buy. Two, it measures supply of inventory, the number of homes on the market. It also analyzes pricing and home prices going up and down. And lastly, the housing recovery index measures time on market. Inventory and interest rates are, in my opinion, some of the strongest indicators of why we're seeing such an increase in housing activity. There is a lack of supply and high demand because the interest rates are low, and also for us, California, Phoenix, Seattle, Salt Lake, those areas are moving here as well. Also, if you look at the number of active forbearances, and just to remind you, a forbearance is a deferment of the mortgage payment. Remember the deference program they came out with back in May or June? The number of active forbearances have been declining almost each month, which is great, right? If we also look at when homeowners exited their forbearance plan, you'll see that 54.6% are paid in full, 30.7% are working out repayment plans, and 14.7% are still in trouble. The things to be concerned about is the 14.7%. We can't shy away from that. That's very well in a short-term sell or a foreclosure. So that's something we need to be aware of. The market's still hot and buyers are active. Let's truly compare what happened back in 2006 when we had one of the biggest crashes in American history. According to the NAR, the National Association of Realtors, the chief economist Lawrence Yun says, such a frenzy of activity reminiscent of 2006 raises questions about a bubble and a potential for a painful crash. The answer, there is no comparison. Back in 2006, dubious adjustable rate mortgages taxed many buyers' budgets. Some loans didn't even require income documentation. Now that's scary. Today, buyers are taking out 30-year fixed rate mortgages. 14 years ago, they were 3.8 million homes listed for sale, and home builders were putting out about 2 million new units. Now inventory is about 1.5 million homes. You can see the difference. And home builders underproducing relative to historical averages. That is actually keeping things a little bit in check. So the thing to notice from that quote is when he said, there is no comparison. Also, major contributors to the crash in 2006 was the fact that stated income loans were being given to buyers. That's the one where you tell the loan officer how much you're making and they don't verify it. Buyers were being qualified for a loan they could simply not afford. And in many cases, little paperwork was needed to qualify for the loan. Simply put, like I just said, they would state how much they made and that was considered enough. Crazy, but that is just not the case now. If any of you guys have bought a home lately, you guys know there is plenty of fun paperwork to do. It might seem that lenders are pretty much asking for your firstborn child in order to approve you to get into a home. They go above and beyond in qualifying buyers for a loan and making sure that that means you will pay. That should give us some sort of relief in respect to the housing market and its sustainability. Also, homes appraising at exceedingly higher values from 1 week or 1 month to the next had a significant impact on the crash, and that's not happening anymore. Appraisers are definitely coming in lower and keeping the market in check. Trust me, we've all seen it as realtors out there. There are stringent guidelines for appraisals and the amount of the bank will lend for a home. I feel we should all take solace in that, knowing that there's many factors that led to the crash in 2006, and that we just don't see those same things today. I don't know about you, but I found the media to inflate the truth or stretch the truth with a nice catchy headline, or maybe even a negative headline to get more viewers. But let's look at the projections for 2021 from people that have their pulse and are experts in the real estate industry. Low interest rates are definitely an indicator of a strong housing market. More buyers, lower interest rates. According to Freddie Mac, they project interest rates to remain low. In fact, lower than what we've seen in the past 5 years. They're projecting interest rates to be in the low 3s. We've already seen them in the 2s for the remainder of 2021. Also, chief economist of Realtor.com, Danielle Hell, states, we expect home sales in 2021 to come in 7% above the 2020 levels. For us in Boise, they are seeing that actually a tick above that, some as high as 12%. All the major services like Fannie Mae, the Mortgage Bankers Association, and more are forecasting an increase in home prices in 2021. That's no secret. Not as significant of an increase as previous years, but still an increase nationally. According to Lawrence Yun, he's the chief economist at NAR, which is the National Association of Realtors. He states, this winter may be one of the best winters for sales activity, and we've already seen that. On a winter-to-winter comparison, this could be one of the best breakout years just based on the fact that pending contracts are such a higher level. In addition, he also says, and I quote, in 2021, I think rates will be similar or modestly higher, maybe 3%, so mortgage rates will continue to be historically favorable. And you want to know what the senior vice president and chief economist of National Association of Home Builders says? He says, with home builder confidence near record highs, we expect continued gains for single-family construction, albeit at a lower growth rate than in 2019. Some slowing of new home sales growth will occur due to the fact that a growing share of the sales have come from homes that have not started construction. Nonetheless, buyer traffic will remain strong given favorable demographics, a shifting geography of housing demand to lower density markets, and historically low interest rates. Did you catch that? He's talking about us. Please note, none of these quotes were taken out of context. The people quoted truly do anticipate a positive real estate market in 2021. You might know a thing or two with the national news taking things out of context. I hope this information is helpful to you in giving you some insight on what 2021 may bring. Remember, if you have questions, it's a text, it's a phone call, it's an email. I'm getting dozens of calls per week of people wanting to work, whether it's in-state or out-of-state. So let's get you on the schedule. Let's answer your questions and see if moving is right for you. Again, call or text the number on your screen and we can talk about real estate, talk shop, whatever it might be, and answer your questions so you feel comfortable in today's market. Again, Brian Hymas giving you the keys to your future.